Hello and welcome. Today we're going to talk about real estate property taxes and how its two components, assessment and millage rates, are used in conjunction to calculate the property tax. The first thing we have to do is discuss what an assessed value is. Assessment is basically an ad valorem tax. Ad valorem meaning it's tax based on a transactional value. So assessors basically assign a dollar value, and that's known as the assessed value, to a property. This value is used in conjunction with your town, city, or region's millage rate. A millage rate, often called mill rate, is the dollar amount your city or town sets and typically is based on the needs in your area. This dollar amount per thousand is used to calculate the property tax. So let's do an example and calculate the property tax. Let's say property A is assessed for $200,000 and the local town's mill rate is $19.50. Property tax is equal to the assessed value times that mill rate. Because the mill rate is a per thousand rate, we need to divide that by 1,000. Then you can simply multiply the assessed value times that rate to get you your property taxes. In this case, the property taxes are $3,900 a year. You can also just simply divide your assessed value by 1,000 and then multiply it by the dollar amount for the mill rate. Let's now quickly go over a couple scenarios on how your property taxes can be subject to change. Let's use an example house, let's call it House A, that resides in Pleasantville, being currently assessed for $250,000 and has an annual mill rate of $21.50. That combination multiplied together would give us an annual property tax of $5,375. During this time, the local town is going to reduce the mill rate to $19.50, but homes are going to be brought up to current date as they're going to be reassessed. For this example, we'll say that the house went from an assessment of $250,000 to $280,000. So simple multiplication, we can find out the new tax for this property is going to be $5,460 a year. That is actually an increase even though the mill rate has decreased annually. Let's review one last scenario. In this scenario, the property owner believes their assessment is too high and they want to appeal that value. After hiring an appraiser to strengthen the homeowner's case for the assessment, they present the data to the assessor and eventually the home gets reassessed to $230,000 from its original $250,000. So recalling the old assessment at $250,000 at the $21.50 mill rate, the property taxes was $5,375. But with the new assessment of $230,000, you can actually get a property tax of $4,945. That difference is $430 in 1 year alone. So just to conclude, property taxes are comprised of two parts, that assessed value and the mill rate. Both are subject to change and it totally depends on your local area. However, you don't have much control over the mill rate as a homeowner, but you do have a limited control over the assessed value of your home. So if there's any sort of issue on public record, maybe there's something that's not correct, or you just feel that it is overassessed, you definitely want to seek out a local appraiser and present that case to your local assessor to get that appealed.